Welcome back to the Compounding Investor. In this video I will discuss the history of BP, its performance, why I hold the shares, and at the end I will reveal my total holdings and how much the company has paid me in dividends so far. This video is for entertainment purposes only and is not investment advice. Please do your own research. I've been investing in BP for over 10 years. Out of the 24 individual companies I hold, BP has grown to become my second largest holding. BP is one of the world's 7 oil and gas supermajors. Its activities include exploration, production and refining, distribution, marketing, power generation and trading. BP also has renewable energy interests in biofuels, wind power, smart grid and solar technology. I buy Dividend shares mainly in FTSE 100 companies, and you might think I'm not diversified enough, but many of the companies I go for are global giants. BP is truly global, operating in nearly 80 countries, including America and Russia. So what exactly does BP produce that the world simply can't get enough of at the moment? For this, we need to go back in time, millions of years ago, to the bottom of the sea. Here, tiny plants, animals and algae, which reached the ends of their lives, slowly drifted to the seabed and got trapped under layers of sand and mud. Heat and pressure built up, and the once living organisms were slowly transformed to oil and gas. BP have been extracting oil since 1908. In the 1980s, the general public were able to buy shares in BP when the British government sold their stake. Throughout the 1990s, the BP share price rose 400%. But the April of 2010 saw BP involved in the largest accidental oil leak in history when an underwater wellhead exploded. $210 million gallons of oil started erupting into the sea. The share price plummeted as investors sold their shares in panic. BP immediately tried to contain the spill by using underwater vehicles to close special blowout preventer valves, but this failed and the share price continued to fall. A second attempt saw BP place a containment dome over the largest leak, but this too failed. Another month went by. In desperation to save the company, BP did everything they could. This time they would use a technique called top kill, which involved weighing the leak down with heavy drilling fluids and mud, but it was to no avail. They even tried what is known as a junk shot, firing in plastic cubes, knitted rope and even thousands of golf balls. But the oil continued to gush into the ocean and BP's future was now uncertain. In 2010, I only had a few companies in my portfolio, but I now saw a global giant literally on its knees, with investors running to the hills. The share price had collapsed 50%, and I asked myself, could this world-leading company that employed so many people and used cutting-edge technology stop a leaking pipe? It was a yes or no decision. I had asked myself a similar question during the financial crash and whether or not Barclays would go under. And I asked myself what Warren Buffett would do under such circumstances when there is panic and chaos all around. BP were responsible for this crisis, but I was confident that they were best placed to solve it. It was a close call, as some of the major US companies were on the verge of stepping in and taking over. BP had to give it one final shot. And on July the 10th of 2010, BP used an army of robots to fit a vastly superior top cap to the leaking well. On the 15th of July, 85 days since the explosion, BP had finally turned the tide and managed to plug the leak. In September of that year, the well was declared permanently sealed. But the disaster had cost the company over $65 billion of clear-up costs, charges and penalties. BP is now transforming and has set a goal to cut its greenhouse gas emissions to net zero by 2050 and plans to reduce oil production by 40% from current levels by 2030. During the shale gas frenzy of 2014 to 2016 in the US, there was a glut of hydrocarbons and the price of crude oil plunged 70%. There was even talk of oil having a negative price. There was so much of it available. This had a significant impact on the profits of companies like BP and Royal Dutch Shell. Less money went into exploration, and the seeds of the next crisis were sown. The global pandemic saw oil demand plummet and further cuts to exploration. But now, as the world gets back on its feet, the demand for oil is suddenly returning with a ferocity never seen before. The world, quite simply, can't get enough of this liquid gold, and I would expect this to show when BP next reveal their profits. Over the last month, the share price is up 17%. Over the last 6 months, it is up nearly 20%. And over the past year, the share price has risen 76%. I have held BP for over 10 years and continue to invest in the company. It is a global giant and pays a good dividend of 4.3%. It can be volatile at times, but it is one of those companies I intend to hold forever. My holding has grown to almost £23,000 and BP have paid me over $8,000 in dividends so far. So am I buying more BP? The answer is yes. I'm not betting the house on it, I'm just buying a little more than I normally do. My portfolio is globally diversified and I never have all my eggs in one basket. I hope you enjoyed this video and got something out of it. If you did, then please give it a thumbs up and consider subscribing to hear more. Thanks for listening, and may the markets go your way.